Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hello, everybody, and welcome to the Real Estate Pros podcast. I have all the way from California, Mr. Brad Rice. Brad, how are you today, sir?
I'm doing great, Michael.
Okay, awesome. Well, we're excited to have you on the Real Estate Pros podcast, but before we get started, we have to pay the bills. Guys, at Investor Fuel, the sponsor of the Real Estate Pros podcast, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses to allow them to build the businesses they've always wanted and to allow them to live the lives they've always dreamed of. Brad Rice, let's get into the origin story. Now, I've got your bio here, but I want to know, how did you get started in real estate? When did the whole, go down the yellow brick road of real estate entrepreneurship happen in your life?
Yeah, Michael, look, thanks for having me today. Appreciate it. I was looking forward to this call with you. I started in real estate right out of college. Believe it or not, it was 1993. So I grew up kind of around real estate. My dad was an architect, a general contractor, and a developer. So I would go to him to job sites, and they were big buildings and that sort of thing. And I kind of got a little bit of a bug on that. But when I was going through college, trying to figure it out, along with having fun, I was exposed to just a few different things that were going on in real estate in California, Southern California, in the San Fernando Valley specifically. There was a real estate agency that was growing like weeds. I mean, literally, where they were opening an office on almost every corner, and it was called Mike Glickman Realty. And I'd see these signs everywhere, and it was really interesting. And when I heard he was speaking at a local college, I was like, shoot, I'm going to go check this out. Turned out it was not only him, but Arnold Schwarzenegger and a few others that were there talking about real estate. And it dawned on me as I was going through college, I went to this event. I'm like, shoot, it seems that no matter where you earn your money, somehow it winds up invested in real estate if you're making money. Why don't I just cut out the middleman and I'll just get into real estate? And so that's how it happened. I didn't really know, anything as far as what vertical in real estate at the time, but I was toward the tail end of my college career, and I was getting married, buying a house, and getting a loan. And there was a loan broker across the desk from me taking our loan application. I thought, this is interesting. So I wound up spending a day with her and fell in love with that business, and that's how I got in the mortgage business. So I started really early on. I was an originator. I became a top originator. That led to starting a company in 1999 that grew to a national lender. We were doing everything. It was a big company, not quite as big as Countrywide at the time, but we held our own, and then fell victim to 2007, 2008, like many of my colleagues. So, but that's how I started. It was really just kind of hands-on, buying a house and saying, hey, this is something I'm interested in.
Well, that was interesting. It's really good for our listeners to hear that, because so many people just listen and then they watch and they don't take any action. It seems like what you did is you saw something, you went to an event, but you also took that extra step of like, I need to find out more, but I also need to take action in this area and find out if this is for me. I love it. It makes me happy that you, what were you going to college for? What was the degree in?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, I was really, prior to that, it was just general education, and then I realized that they had in the finance major, so I declared a major finance. They had a minor in real estate, very unique. I went to San Diego State to begin with, but I finished up at Cal State Northridge, and that was where they had this real estate minor, and so that's what I chose. And it was an imperfect system because I graduated with a lot of knowledge, but I was actually one credit shy of getting my broker's license. So I could get a real estate license, but the broker's license, gives you the ability to own a company and that sort of thing. And so I wound up doing a correspondent course that took that class and then got my broker's license. So I never held just a regular real estate license. I always had my broker's license.
How about that? You just skipped right to the top.
Yeah.
I love it. Yeah. So now today in 2025, you have this career as a loan originator, and in between 2008 and 2025, what did that world look like, and then where we are today? Can't wait to get into a little bit about what you're doing in technology and real estate, but what did those years look like?
Yeah, look, 2007 was a rough year for most people, that were in real estate, especially in mortgage. I mean, the blame for the entire collapse was really squarely on the shoulders of, at the time, they said mortgage brokers. Anybody that knew the business knew it wasn't really them. We were just the patsy.
Right.
Yeah.
You're what they pinned it on.
Yeah.
Yes.
It was a time where Wall Street was heavily involved in mortgages and securitizing them, and they were hungry. And so as the 2000s elapsed, as we got into 2005 and the subprime market, and the expansion of the mortgage product is really what set the demise, because we were flying high. Real estate prices were going up all the time because demand was high, and we were expanding the mortgage product. And those that were around at the time can remember the 100% financing. And then 100% financing, and you could have credit scores as low as 650. Then you could have credit scores as low as 600. Then you could have credit scores as low as 500. And you could have a bankruptcy yesterday, and then you don't have to declare your income. You can call stated income, or what we call NINA, no income, no assets. It was ridiculous, and I wasn't smart enough to know how to short the market, but I knew it was coming. And right. I won't get into the stories about having meetings with these Wall Street guys and just saying, hey, what are you going to do when the market values don't go up anymore? But they were just making money hands over fist, and we were all following the lead because they weren't buying any other product except for that. And so we fed them what they were hungry for. But it was a hard time. Companies were closing left and right. Investors weren't buying loans anymore. And, there was almost no way to survive unless you were sitting on just a lump of cash that you could burn through. So there were very, very few lenders that made it through that. When you've got a giant company like Countrywide that collapsed and their only savior was Bank of America coming in and acquiring them, that it was a rough business. So, it is what it is. I wound up being on forced retirement for a couple of years, cleaning up the mess. But, then I ultimately got back in the business. What can I say?
Yes, sir. And so now we're back, and now we're solving the problem of that dreaded, sometimes, and real estate agents have I guess this is a cuss word in their lexicon, but the for sale by owner. What are we doing to help these FISBO, these people that want to sell their house by owner today?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Well, let me start by saying FISBO has been around for a long time, okay? Since real estate sales started, FISBO has been around. And interestingly, and people don't know these statistics, approximately 10% of the sales in the market every year are agentless sales, okay? And this is published by NAR in their annual publication. And it varies based geographically on where there's more and where there's less. But if we just use that as an average percentage, 10%, that's a pretty big beachhead market. And in your normal year where you've got volume of about 5.5 million, that's a pretty big market just to be dabbling in those that don't have agents. Now within that, there are other types of transactions. For example, some builders, they don't pay a broker co-op. There is no agent. They report as agentless. But for the most part, these are people that are, maybe they're savvy. Maybe they just like doing everything DIY. Maybe they just don't like spending money. And I talk about there's two types of people in this world: people that value their time more than money, and people that value their money more than time. And you can guess which is the larger pool, right? People that value their money more than their time. They're willing to invest some time to save money. And so these folks have been around for a long time. But when you start pulling back the covers, as I did in 2018, I started investigating, like, who are these people? Why are they selling it on their own? What's their background? What's their experience? How are they doing it? And what I learned is that the vast majority of them had a connection in real estate through somebody they knew. It was a close friend. It was a relative. It was a husband that was in real estate. It was somebody in escrow. It was a title person. There was somebody that was that kind of connective tissue that was there to guide them. A lot of times, believe it or not, it was somebody in the mortgage business. And because a good mortgage originator knows the entire process and could guide just about anybody through that, without using a real estate agent. Not everybody can, but there's a lot of them that are very good. And so that was the thing that was pretty interesting to me. But what was more interesting is how they accomplished that process. And typically they would grab paperwork online. They would download some, templates, or they would hire an attorney. Those were the two main focuses. So I thought about it and I was like, gosh, why isn't there an easier way? And what are the struggles that they have? One of the major struggles was marketing, exposure for the property. Using Craigslist, of course, in the last 2 decades, using Facebook Marketplace, which if you've ever looked for homes on there, like you search for a home and all of a sudden you see a baby carriage. Like it's not really designed for that. There is no real, there's some sites out there that you can post on that don't really do anything. And then there's these MLS syndication sites where you can just go on and it just pushes you the MLS. To me, that seemed like the logical way to do it, because when you're in the MLS, you get put into a feed that then puts you on all the major websites. And that's where you're going to get the exposure. So those major websites, obviously 98% of people are going to Zillow first, but some people might prefer Redfin or Realtor.com or Homes.com, whatever their preference is. But Zillow's the 800-pound gorilla. And so I thought, God, there's got to be an easier way to get people exposed to that, number one. And then number two, the pain point of the negotiation. That was the second thing that people are like, I just don't know. I'm not comfortable negotiating. It's an awkward thing. You don't want to sit down across the table from somebody and talk about it. You might miss some of the terms. You want to make sure you do it right. And so I said, okay, that is something we can solve for. So I designed a system that allowed somebody to operate in a marketplace that's just for sale by owner. So if you go to our site, it's called HomePie, HomePie.com. and you can do it from your mobile device or you can do it from the website. It's mobile friendly. But you can do all the things you do on the major sites like Zillow. You can search, you can save, you can share, you can, browse, you can go through photos, you can read. All that's there. But then you can communicate directly with the seller through instant chat in the platform. Now, the benefit of that is a lot of sellers, if they list their property, let's say on Zillow, and they put their phone number on there, they just get pounded with phone calls, right? Maybe from some of your audience, like, "Hey, I'll buy your house," but a lot of it's real estate agents that
want to list it.
Yeah. But a lot of it's real estate agents are trying to gain the listing. Okay.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Okay. And so it gets really tiresome for them to get that, all the phone calls and filter through them. So by having instant chat on the site, they don't have to put their phone number out there until they're ready. And they have somebody that registers on the site, so they're a real person. And then they can have that communication. That communication then leads to to a visit. Do they want to visit virtually or in person to view the property? So the sellers can walk them around virtually using, either FaceTime or, some service, Zoom, whatever it is. Or, they can go out to the property, take a look. But here's the significant thing that we constructed that is really our standout technology, and it's our offer negotiation tool. So you're familiar, probably your audience is familiar with this process when you use an agent of creating an offer, okay? That is a bit cumbersome. It's archaic. They might use zip forms and DocuSign and all that, but still the agent has to go in and fill out all the terms of the agreement, kind of review it with the buyer and then send it to the buyer for electronic signature, hopefully. And then they have to get a hold of the listing agent and say, okay, how do you want to get this? And most of the time it's email. And guess what? 50% of the time, the email doesn't get there, or they say they can't find it, and you have to resend it and follow up. Did you get it?
It's in that spam box. Yeah,
all of that.
Right.
And in a market that's really robust and you have multiple offers, it's like your offer gets lost in the shuffle.
Right.
And then when the listing agent gets it, they got to go to the seller, get a signature acknowledging receipt, and then fill out a separate counteroffer, sign that, send it back over to the buyer's agent. The buyer's agent then goes to the buyer, gets it signed. So that whole process, it's ridiculous. It goes back and forth. It takes days instead of hours or minutes. We digitize the entire thing. So the offer is done digitally. There's a ledger that can be audited at any time, a digital ledger, but the offer is created with all the terms. Could be from a mobile device or your desktop, and how much you're looking to offer. What's your down payment if you're getting a loan? Are you paying all cash? Upload your proof of funds. What contingencies do you want? Do you want a contingency for appraisal? Do you want one for inspection? Do you need to sell your house before buying a house? All those same terms. When they click the button to make the offer, the seller immediately gets a text and an email saying you've got an offer. Congratulations. It's also built for multiple offers. And they go in and they can then accept, counter, or decline each of those terms. That process goes back and forth till all terms are agreed to, creates one clean contract that then gets e-signed. Here's the beauty of it. If you've ever been in a transaction where there's been multiple offers, maybe there's 3 or 4 different multiple offers, guess who has to figure out the final terms? The escrow company or the attorney, depending on the state.
Yeah, the closing
Errors
company.
get made. Maybe Michael, I made an offer and you countered it and you said, look, I'll pay for your closing costs, but I'm not paying your real estate agent commissions. And then the buyer comes back and says, no, I want you to pay both, but I'll offer you more. And you come back and say, okay, that's fine, but remove your appraisal contingency. These things are happening. And then they have to decipher that by reviewing all the documents. Well, you don't have that problem with what we created. So that's, there's a lot more to it, but that just kind of gives you a glimpse into what we've done. We bring in all the different verticals and vendors that you need through the process to get you over the finish line. And we've closed over 1,000 transactions since inception.
Okay, so there's more than proof of concept when you
Yeah.
have 1,000 transactions. So what markets are you operating in right now?
So we're in all markets, but our full product is only in California and Florida. There's a process to kind of opening up each state, and we're still really at the beginning stages of this whole thing.
Right.
And so the plan is to expand that. We're raising money now. We've been kind of hunkering down and working on the product and getting customer feedback for the last few years while market's been really in turmoil. Watching what's been happening with the lawsuits and then our settlement and now clear cooperation, and just kind of on the sidelines observing, but really perfecting our technology.
Yeah, yes.
And we
Okay.
think that everything's converging now. So we're raising a round of capital to really go out and start marketing.
I definitely feel like I've had my real estate license since the year 2000, and I just read yesterday that in our local market, I think 20% of the agents dropped off, so
Yeah.
they're no longer agents. And I do, and the other thing that's frustrating is, as somebody that does inventory, I have flips and I put them on the MLS on my own stuff. Our MLS system is archaic. It is absolutely hasn't been updated in like 8 or 9 years. And I feel like there is I had this, again, more than a feeling that at some place there's going to be a total disruption in this, and it'll be better for the consumers. And it just could be HomePie. So it's operating in California and Florida. What is the, if I were to ask you, what was the vision like when you started, and what's the vision now based on kind of maybe some pivots that you've made?
That's a good question, Michael. So there have been some. The idea when we first started is that we'd be purely a tech company. We wouldn't be a real estate company. But what we found is that we were locked out of the ability to get on the MLS without being a real estate company. And a lot of things are changing with that right now, which I'll get to. But so that was one thing. We had to go get licensed, which is kind of the preventative factor in expanding the full product to every state, right? So you could list your property, in any state, in Tennessee, on the site, but you don't get syndicated out to the MLS. We got to go through a licensing process for that. So that gets us into the feed that gets us syndicated out to all the sites. So that was the first lesson. It was like, oh gosh, all right, we got to go back and get licensed. The second one was we got licensed, we got into the feed, we got our properties exposed on Zillow. Now we're getting traffic. So the beauty about this two-sided marketplace is you focus on the inventory, you get the buyers, right? So you get the listings and you get the buyers. A lot of two-sided marketplaces is like, what do? It's chicken and the egg. One of the toughest ones was, Uber and Lyft. Well, shoot, you need your drivers, but then you need your passengers. What do you get first? If you get the drivers with no passengers, you get the passengers with no drivers. That was really tough. They solved a really, really tough problem. So this was a little easier for us. We're just going to concentrate on inventory. But what happened was once we syndicated out to all the major sites, a lot of buyers already had an agent. And so we had agents coming into the site. And because it was built peer-to-peer initially, like buyer and seller,
Right.
the agents were pretending to be the buyer, writing
Right.
the offer, and they get to the end and they'd have to sign the document. And so we have to manually go in and change it and do all these things. It was really tough. So we had to build a bridge, a connection between the agent and the buyer, which we did. So now a buyer can go in and invite their agent, connect the account, or the agent can go in and invite the buyer and connect the account. And then the agent becomes their guide, but then the signing is from the buyer. So that was a big pivot that we had to make.
And is the seller still in control, I guess, at this point, of whether or not there is a commission and commission gets paid and things like
Yeah.
that?
So really great question. So the fallout of the lawsuits was decoupling of commissions. You don't take a listing and say, I'm going to pay X amount for the buyer's agent. Now it's negotiated. So it becomes a line item. I'm writing an offer as a buyer or a buyer's agent. One of the line items is I want you to pay, X amount for closing costs. And the other one, I want you to pay X amount for real estate agent commission. So it becomes a negotiable or negotiated item. And so what we try to educate our sellers on is don't think about what you're helping the buyer out with for commissions. That's always existed. Think about what your net is. So if you're listed your house for $400,000 and then there's $10,000 of commissions being asked for, what are you going to net on that property? If you're not happy with that net, counter the price. But obviously that buyer needs some help. They may not have the cash for that commission. So just think about the net on the property and not where the money is going. And so that's the education we provide.
That's great. That seems to be, if I'm projecting, when they're on the site and they go through all the calculations, they can see it in real time and go, "Oh, okay, I know what I'm netting now," and so I'm happy or not happy. I'm interested. This is maybe a left field question, but is there any assimilation with blockchain or crypto? Or I know there's in Florida there is a property which is supposed to replace title. They want to put the title on the blockchain. Is there any assimilation on there or technology, in that assimilates with some sort of crypto part of it?
Yeah, there isn't today. Look, I do know property, and I know they've been for a long time trying to solve that, and they had the first crypto purchase that they kind of marketed, and blockchain is still a ways off. I had somebody on my podcast yesterday from national title rep for one of the big three, and we talked a little bit about this, and so we're still quite a lot. Although it makes sense if you think about blockchain, especially from a title point of view, it's like, why not? Why should we have to pay title every time transfer a property or we get a refinance? It should be so easy. And if you put it on the chain, you have guaranteed title, right? Nobody can break that. But the problem is that the municipalities across the United States, the ones that are not, let's say, expeditious in their recording.
And they're just small town folks, yeah.
Yeah, right. I mean, it might be a year before some items get recorded. So it's not uniformly solvable at this time. I think inevitably it will get there. Will it get there quicker with AI? Will it get there quicker with other things? Likely. But, like most things, they take longer than we suspect they will. So if we put a label on it and we say, hey, in 5 years it should do this, or in 10 years it should do that, you never know. It's purely a guess. And like most economists, you're going to boast about it if you're right, and you're just going to ignore it if you were wrong. So I don't try to guess at the timeline, but I think that ultimately will be there. For now, we just got to do it. We got to use title insurance and those things that already exist.
Right. Yes. So I agree. I like where they're going with it. I understand it completely, but I had the same, the blocks that are involved in it, because when you have three or four different people you got to get to in order to get the title work done, times all the properties that exist and the addresses that exist in the United States, it's a pretty daunting task. Okay,
but I do, just to put a cap on that, Michael, and then we'll move on. With AI, I think it does get expedited. That's all.
Right. Yep. So Brad, tell me a little bit about what does family life look like for you? What is your world like outside of real estate? What do we like to do there? I always like to kind of dive into this before we end the show to kind of give a little flavor for what Brad Rice is all about out of entrepreneurship.
Okay, well, I'm happy to answer that. I'm a proud family man. I've been married for 31 years, and we've got 3 adult children. My youngest is 22, and then 26 and 28. And I'm proud of them. They're all contributors to society. They're good people. They love each other. We live close to each other.
Oh, that's great.
We spend time together year round. We like camping. We like going to the lake and spending time on the water. And that's what I do. And I've learned at this point in my life, I've learned that really is the most important thing. I love business, and it's not purely it's not pure fun to be in business. There's trials and tribulations and all sorts of things that you don't account for when you start a company, when you own a company. But at the end of the day, it's all about family, and it's about enjoying your life. And we're here once, and you don't want to regret it. And I think about folks that have made a lot of money in their life and just didn't have the other fulfillment, and regret it at the end of their life. So I try to live a full life every day, and regardless of all the crud that happens around me during the day, I go home and I rest easy at night because I've built a pretty good life and I'm pretty happy with it.
Oh, that's awesome. Well, Brad, where can people reach out, learn more about you, learn more about HomePie.com? Where are all the places where we can find you?
Well, probably the easiest way to navigate to any of these things to home, you can go to HomePie.com to see what HomePie is. But my podcast, my mortgage company, all these other things that I'm kind of involved in, you can find on my personal website. It's thebradrice.com.
TheBradRice.com. We'll put that in the show notes, Brad. Thank you for being a part of the Real Estate Pros podcast. Folks, like and subscribe. Go down to the BradRice.com. Go check his stuff out. And folks, we'll see you next time.
Thanks for joining us for today's Real Estate Pros show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.